Hello, happy Friday to all, and good morning. This is Kelvin here. Welcome to today's Daily Dose of Market Insights. Happy Friday. Today will be Friday, the 9th of May 2025. So before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into today's daily dose, today's intraday technical outlook on those broad-based cross-asset classes, let's have a quick recap what has taken shape yesterday in terms of news flow, economic data release, and as well as their impact on the intraday movement of the broad-based cross-asset classes. So yesterday's more important data is more pertaining to this ongoing US trade war against the rest of the world. So let me share with you this very interesting news flow that has taken shape yesterday over here. So yesterday, US officially announced a trade deal framework with UK. All right, so it's a framework, not a deal yet. That means a deal is, will state the exact terms on and condition to actually lower trade tariffs. So in this trade framework that has been officially announced between UK and US, UK agreed to procure 10 billion Boeing procurement, as Trump said, and US tariffs on British steel and aluminium to cut to zero. This from UK, but the net overall impact over here is this. All right, let me share with you guys. Is that the major takeaway? Okay, let me put it in bigger so that you guys could see on the screen. Yeah, this should be big enough. Okay, so the major takeaway from that yesterday's officially signed US-UK trade deal framework is that the original reciprocal tariff of 10% on the UK still remains in place. So this likely signals that agreement with other countries may not necessarily lead to lower tariff rate over here. But the most important thing that during the sidelines of the Q&A session in yesterday's official announcement of this UK-US trade deal framework was that on the sideline, Trump foresee that the massive 145% levy on China eventually may be lowered. And this come on the backdrop of this weekend meeting between US officials and China officials in Switzerland. And also, very startlingly, he also made this remark over here. Okay, one second. Let me share with you guys. It's down the line. Okay, so Trump promises that if trade deals combined with tax cuts come to fruition, you better go out and buy stock now. So he publicly made this comment of buy stock now. And once this remark once this remark is being made from Trump to buy stocks now over here, we saw a very strong rally across the board in the major US stock indices. All right, so the major stock indices rallied at the 11 p.m. around the 11 p.m. mark where Trump made this statement. During the Q&A session on the officially announced US-UK trade deal framework, stock rallied. All right. So, but however, what's interesting over here is that the intraday rally on the major US stock indices got somehow fizzled out in the mid-US session, and profit taking starts to take shape in the last hour of the US session yesterday. So overall, the net result is still positive among the major US stock indices. The S&P gained by 0.6%, the Nasdaq 100 outperformed by almost 1%, the Dow Jones 0.6%, and the top performer is the Russell 2000 up by 1.85%. But if you look at the price section on the intraday basis, is in fact not that rosy after the last hour sell-off that's being seen on the major US stock indices yesterday. So if I were to look at the chart on the S&P 500, so this is the chart of the S&P 500. So what we could see over here is that it ended with a daily doji candlestick, all right, yesterday. So yesterday, after Trump's made that remark, it's a great time to buy stocks now. Market hit an intraday high of 1.58%. And upon that, hitting close to the 200-day moving average, which is in this orange line over here, it actually trended down with a gain of 0.58% over here and ended it with a doji daily candlestick, representing hesitation by the bulls to push price higher, as the closing price is similar with the opening level yesterday. So this is what I call a uncertainty daily doji candlestick pattern right below the 200-day moving average. So very similar was seen on the Nasdaq 100 as well. Okay, right below the 200-day moving average. So this actually tested the 200-day moving average before some profit taking took shape yesterday, and ended it with a daily doji candlestick as well, representing a bit of hesitation by the bulls to push prices higher. So what we could see over here is that the US stock market participants are still pretty much cautious of what going to happen over the weekend, over the trade, so-called the preliminary trade talks between US officials and Chinese officials, and it may not be so rosy as proclaimed by US President Trump yesterday in the sidelines of the announcement of the US-UK trade deal framework that has been officially announced to the whole world. All right, so something to take note of, given the negative, not so rosy price action at the end of yesterday US stock market by the close of yesterday US session over here. And what we could see over here is that because of this so-called time to buy US stocks now remark, that causes also the dollar to strengthen as well. So if we look at the dollar index over here, so the dollar index right now has managed to clear above the 20-day moving average by rallying by 0.8%. All right, 0.8% over here. It cleared above the 20-day moving average yesterday, very clearly after failure to do so on the 1st of May, all the way up to the 7th of May. So yesterday it finally managed to clear above it by a strong bullish candle. And what we could see over here is that the dollar strength may persist in the near future from a multi-day perspective to revisit or retest the 20-day, 50-day moving average that is acting as a resistance at around the 102 level. So this is the US dollar index over here. So we start to see some form of dollar strength coming back into the picture. All right, some form of dollar strength coming back into the picture, at least from a short-term perspective over here. And also what I could see over here is that safe haven asset demand also took a hit as well after Trump's remark over here, where we start to see gold price tumbled yesterday by 1.7%, and right now is attempting to actually stage a breakdown below the 20-day moving average. Okay, right now it's traded below the 20-day moving average. But what's interesting over here is that it managed to actually now shape a daily impending bullish hammer candlestick right at the retest of this former major ascending channel resistance, now turns into a pullback support, which is this line over here, this green line, all right, the course green line. So later I'll share with you the intraday levels to watch for gold XAU/USD. So what's interesting, there's some form of demand coming back into gold again, but it's still trading below the 20-day moving average. So a bit of mixed element right now for gold. So gold still is down by 0.1%, but it's actually off its intraday is off its Asia session intraday low because it's traded at the low of 3,275 over here. Okay, so it off its intraday low. Okay, 1 second, let me put it in. Okay, so at this point in time, it's actually managed to trim its intraday losses as we are speaking right now in today's Asia session, but it's still trading below the 20-day moving average that it has broken down in the start of today's Asia session today. But this is the red line over here, this turquoise red line. Okay, notice this pink line over here is the 20-day moving average. Let me put it in writing, this bright pink line. Oops, why is it not picking up? Okay. Okay, this bright pink line here. Okay, it's the 20-day moving average. So I repeat over here is that a bit of mixed so-called performance on the Gold XAU/USD right now. Not so rosy demand because of yesterday's Trump's time to buy stocks now remarks that causes the Gold XAU/USD to drop by negative 1.7% yesterday, and today's Asia session it extended its losses by hitting a current intraday low of 3,274, but this 3,274 managed to find some support right exactly at this turquoise green line here. Okay, this turquoise green line. So what is green line? This green line is in fact the former major ascending channel from the low of 2024 resistance, got broken out on the 11th of April. Previously, when it dropped close to the 20-day moving average on 1st of May, it managed to stage that V-shaped recovery. And right now, it also attempt to shape that recovery after the retest of it in today's Asia session by trimming some of its intraday losses to close marginally lower at almost the unchanged mark as we're speaking right now, negative 0.02%, and it starts to form a bullish impending daily hammer candlestick, but it's still trading below the 20-day moving average. That's for Gold XAU/USD. All right, safe haven demand starts to get a bit less rosy because of Trump's optimistic remark yesterday is stating it's time to buy stocks. All right, over here. So as for other news flow is Bank of England. So Bank of England yesterday cut the benchmark rates to 25 basis point as expected over here, all right, by 25 basis point to 4.25% from the previous 4.5%. But however, among their members over here, they are not as dovish as expected. All right, so what it's actually a divided decision that surprised market and suggested that the growth risk posed by US President Trump global trade war hasn't derailed its plan to ease policy only cautiously. All right, so it's only a dovish cautious we call it a dovish cautious stance as advocated by Bank of England monetary policy outcome yesterday. How do I do that? Why it's implied that to be a cautious dovish stance? Because 5 members of the BOE monetary policy committee voted for the move, while 2 wanted a larger half point reduction and another 2 voted to hold rates steady over here. And during the policy in its policy statement, the MPC issued this statement saying that easing should continue to be gradual and careful in light of the volatility in the global economy caused by Trump's sweeping tariffs over here. So what it means that over here is that it's a not all out start of a we call it a consecutive interest rate cut by Bank of England. So Bank of England may pause in the next meeting to assess the current latest situation due to Trump's trade tariffs plan, not only in UK but against the rest of the world. So overall, it's more of a cautiously dovish stance as portrayed by Bank of England's action yesterday, rather than a all-out dovish stance where we may start to see a series of interest rate cut in the UK. All right. So, and also one particular news flow in today's Asia session is a rosy data out from Japan, which is household spending. So household spending actually rose 2.1% year on year. So that is actually the best so-called increase in the last 3 months. All right. Also, okay, let me get it out. Okay, why is it so long? Oh gosh. All right. So household spending rose 2.1% year on year in the in March over here. So this is the biggest rise or strongest rise since December in the last 3 months. All right, over here. So with this better than expected increase in Japanese household spending, that led to the Nikkei 225 to actually rose by 1.5% as we are speaking right now in today's Asia session. And very interestingly, if you look at the movement of the Asia session, Asia market today is rather mixed. We do not see a kind of a all out risk on scenario that's been portrayed in the Asia stock market today. Yes, the Nikkei 225 outperformed by 1.5%, whilst the Hang Seng is down marginally by negative 0.10%. The China CSI 300 is down by negative 0.3%. And if you look at the other Asia market, like the Kospi 200 is almost unchanged at unchanged mark. The Taiwan is up by 1.2%, and the ASX 200 is up by 0.4%. Our STI up by 0.7%. So it's a rather a mixed performance across the board in the benchmark Asia stock indices for today. All right, so that sum up today's first session of the daily dose. So let me take you guys the intraday, the second segment of today's daily dose, which is the intraday technical outlook. So before that, let me expand my screen so that you guys can have a better view of the charts. All right, over here. So let us start with the FX market first. All right, starting with the euro dollar. All right, so the euro dollar yesterday broke below the 20-day moving average and so broke below our short-term pivotal support level as well at the 1.1240 level. So I'll be using this former minor range support level that was previously in place from 2nd of March all the way up to yesterday's European session low that has been taken down decisively at the start of the US session, which is at 1.1280. So 1.1280 will be my short-term pivotal resistance for today, and we'll flip to a intraday trend bearish bias for the drop for a potential we call it mean reversion decline drop to extend towards 1.1120 1.1050, which is the former long-term secular descending resistance from Jan 2000 to 008 high, now turns into a pullback support level and also close to the 50-day moving average as well over here. Right, so let me put it in writing. Okay, so the 50-day moving average is exactly 1.1050 over here. All right, so this is a zone. So flip to a intraday trend bearish bias for this residual drop to expose the next support level at 11120/11050, which confluence with a significant elements. Graphically, the former long-term descending channel resistance from Jan 2008 high now turns into a significant pullback support, and mathematically, the 50-day moving average that is acting as a support at the 11050 level. Only a push up and an hourly close above 1.1280 will invalidate today's intraday trend bearish bias for the residual drop to see the boost coming back into the picture again for the euro dollar for exposing the next intermediate resistance at 11350, which is the 20-day moving average. Above it, Macy's 11425 next. Right, so that's for the euro dollar. Next up will be the sterling pound over here. So the sterling pound also broke below the 20-day moving average, which is our short-term pivotal support level. Yesterday now turns into a pivotal resistance at 133 figure level. So using 133 figure level, we'll flip to an intraday trend bearish bias for today for a residual push down First support level to watch 132.05. A breakdown below it may see 131.20/130.65 coming in next, which is also correspond to the rising 50-day moving average as well. Only a hourly close and a push up and a breakout above 133 figure short-term pivotal resistance for today will invalidate today's intraday trend bearish bias view for that residual drop to see the bulls reviving back into the picture, exposing the next near-term resistance level for sterling dollar at 134.20. Above 134.20 may see 134.80 next. So that's for the sterling dollar. Onward next will be the Aussie dollar. So the Aussie dollar tumbled as expected, and right now it managed to stage a revival back above the 20-day moving average. All right, so now it's attempting to trade back above the 20-day moving average after hitting a 63.70, which is our next support level that we have yesterday. So what you could see over here is that perhaps another round of choppy price action movement again. Very mixed element on the Aussie dollar. What we could see is that we start to see a bullish divergence on the hourly RSI, okay, after hitting the oversold level. Right, let me put it in writing over here. Okay, bullish divergence with the price action now attempting to reintegrate back above the 20-day moving average. So with that, we will have a neutrality stance for today on the Aussie dollar given such mixed element. So neutral between 63.70 and 64.35 for now. So only a break up above 64.35 may revive back the bulls on the Aussie dollar to revisit 64.65, which is the 200-day moving average, now acting as the next intermediate resistance level. Above 64.65 may see a retest on this Wednesday intraday high at 65.15 next. So that's for the Aussie dollar due to mixed element. Yes, yesterday we see a sell-off, but this sell-off seems to be losing downside momentum as the price action of the hourly RSI shaped a bullish divergence after hitting the oversold level, oversold region, and price action now is attempting to reintegrate back above the 20-day moving average after a retest below it in today's early Asia session. So flipping to a neutrality stance due to this mixed element, neutral between 64.35 and 63.70 for now. That's for the Aussie dollar. Next up will be the dollar yen. So dollar yen yesterday do a squeeze up over here, and this squeeze up is now resting right below the downward sloping 50-day moving average, and also the former major ascending trend line support now turns into a pullback resistance. So this ascending trend line support was formerly from the low of 16th of January 2023 low, broken down on the 10th of April, and now managed to get rejected recently last week on 2nd of May, and right now is attempting to shape a retest of it again as we are speaking right now. Right, that by shaping this small little spinning top candlestick pattern that is forming, impending spinning top candlestick pattern that is forming on a daily basis and right below a downward sloping 50-day moving average. So it's something like a pivotal resistance zone right now, medium term 14550/14610. And if we would do look at the daily time frame chart, not daily time frame, the hourly time frame chart on the dollar yen over here, we start to see the RSI overbought hitting the overbought level, okay, which is also the previously overbought level over here. Okay, and exit from this overbought. So every time it hit this overbought level, this similar overbought level at around the 79 level on the hourly RSI, price action at least shape a minor pullback. Okay, previously over here, this pullback is much more drastic, and right now similar price behavior is being seen on the hourly RSI. So with that, we'll be using 14610, which is our upper limit of the medium term pivotal resistance zone as shown on the daily time frame chart. We will have a intraday trend bearish bias on the dollar yen, but only have a first support level to watch will be at 144.40. So only a breakdown below 144.40, which was yesterday's US session low before that kickstart of that intraday swift up move up. Only a breakdown below 144.40 or 144.40 will kind of increase the odds of a much more pronounced intraday bearish tone to revisit the 20-day moving average. Now I think now acting as a next near-term support level at 147.95. However, if price action starts to shape a bullish breakout above 146.10 and the hourly close above it, this mean reversion rebound scenario will extend to the upside, exposing 147.10, and above 147.10 potentially sees 148.10 coming in next, which is the minor swing high area of 8th of April and 10th of April. So that's for the dollar yen. Next up will be the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 started to trade sideways. All right, over here, sideways around the 50-day moving average. All right, so intending to actually trade around the 50-day moving average over here. So still no change, still hovering within this minor ascending channel that is still in place since the low of 16th of April 2025. With the short-term pivotal support that we have yesterday, 22,380, so still no change. So still using the 22,380 as my short-term pivotal support level for today on the Hong Kong 33. Still maintain that intraday trend bullish bias, but price action have got to break above the 22,930 soon. So that was yesterday's high as Asia session high as well, and almost to in line with today's Asia session high, unable to break above it before price actions shape a pullback and traded around the 50-day moving average right now as we are speaking. So this is level is put in writing 22,930. Okay, a clearance above 22,930 may see the much more may trigger off an increase in probability of today's intraday trend bullish bias to expose the next near-term resistance level at 23,360. All right. However, if price action start to shape a bearish breakdown and hourly close below 22,380 short-term pivotal support level for today, that would invalidate today's intraday trend bullish bias to expose the next near-term support level at 22,110. A breakdown below it sees a deeper corrective mean reversion drop to retest the 20-day moving average that is also confluencing with the next near-term graphical support level or next near-term intermediate graphical support level at 21,605. So that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 continues to trade higher over here, and the hourly RSI continues to hold above the 50-day moving the 50 level mark as it stage a bounce off it, and also stage a bounce off exactly this minor ascending trend line, parallel ascending trend line that is in place since the low of 6th of May. So with that, we will tighten our short-term pivotal support for today at 37,150, still maintain 37,140, pardon me. I repeat, tighten our short-term pivotal support level to 37,140, and we will maintain the intraday trend bullish bias for a residual push-up towards this key resistance zone here at 37,890 / 38,135, which is the 200-day moving average, acting as a similar resistance level. The minor swing high area of 19th of March and 26th of March, and as well as this medium-term descending trend line that is in place since 31st of January this year. Only a sudden push down and hourly close below 37,140 that would invalidate today's intraday trend bullish bias and kickstart a kind of a the start of a minor bearish reversal scenario, exposing the next near-term support level at 36,630. Below it sees 36,200 coming in next, which is the 50-day moving average, acting as a similar support level as well. So bearing in mind, why do I say this is a residual push-up? Because the hourly RSI has started to flash out a bearish divergence over here. So that's why this is a residual push-up. So after this residual push-up, if we start to see bearish reversal candlestick on the hourly time frame chart over here, so that could be the risk of the tipping point to kickstart at least a minor bearish reversal scenario on the Japan 225. All right, next up will be the Germany 30. So the Germany 30 continues to trade higher over here, retested the current all-time high area at 23,480 before it trades sideways. RSI still remains healthy above the 50 level mark over here. No bearish divergence that's being formed, as hasn't hit the overbought region yet. All right, over here. So net overall still no change. First support level to watch for today will be yesterday's European session low. Okay, and so correspond to the lower limit of this minor ascending channel that I drew from the low of 11 of April. That is 23,280, but I don't want to put it so tight as my short-term pivotal support level. So short-term pivotal support level remains unchanged by the swing low that is depicted by the bullish hammer candlestick of 6th of May and the bullish hammer candlestick of 8th of May at 23,070. So still using 23,070 as my short-term pivotal support level, maintaining that intraday trend bullish bias on the Germany 30 above 23,480 exposes the next intermediate resistance coming in at 23,920, 1.38 Fibo extension from the low of 7th of April, and as well close to the upper limit of this minor ascending channel from the low of 11th of April. Only a bearish breakdown and hourly close below 23,070 will invalidate today's intraday trend bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support at 22,685 and potentially 22,320, which correspond to the 50-day moving average as well. So that's for the Germany 30. Next up will be the US Wall Street 30 over here. So the US Wall Street 30, there's some signs of weakness as being depicted by the hourly RSI. So the hourly RSI, what you could see over here is that there is a resistance that's being formed, right? Horizontal resistance over here. And if we connect the recent lower low, there's actually a bearish breakdown on the lower low. All right. So indicating some form of weakness ever since the price action starts to drift upwards since 7th of May. All right, so and this last push up was yesterday's Trump's optimistic remark yesterday. So given that there is some form of technical weakness on the US Wall Street 30 as being depicted by this not so rosy price action that I explained earlier on the hourly RSI, and price action hit exactly at our short-term pivotal resistance yesterday. Yesterday we do have a neutrality stance. So with that, we will flip to a intraday trend bearish bias for the US Wall Street 30 using 41,470/740 short-term pivotal resistance for sure that got that shaped a bearish reaction of it yesterday. First support level to look out for will be this level here. Okay, at 41,135, which is the 50-day moving average, I think as the near-term support level. Okay, let me put it in writing. Okay, 41,135. Okay, a breakdown below 41,135 may expose the next intermediate support zone at 40,690/430, which correspond to the very closely to the 20-day moving average as well. Only a breakout and a bullish breakout and hourly close above 41,740 short-term pivotal resistance zone upper limit that would invalidate today's intraday trend bearish bias. So that would invalidate today's intraday trend bearish bias to see a squeeze up to test the medium-term pivotal resistance zone of 42,080/42,400, which confluence with the 200-day moving average as well. So i.e. in a nutshell, given the bearish reading that's being seen on the hourly RSI, we will flip to an intraday trend bearish bias on the US Wall Street 30 for today using 41,470/41,740 as my short-term pivotal resistance zone. Price action got to break down fast below 41,135 to gain more traction on the bearish side of the story to expose the next near-term support level at 4690/4430 next. All right. Lastly will be the Nasdaq 100. So the Nasdaq 100 also shaped a bearish reaction of the medium-term pivotal resistance zone at 20,250/20,390 over here. And what we could see over here is that price action yesterday shaped a higher high over here. There's a higher high, but the RSI hitting the overbought level okay, hit the overbought level and shape a lower high. Right, so that's a bearish divergence, so indicating some form of weakness in terms of momentum as being depicted by the hourly RSI over here. Right, so with that, we will flip to a intraday trend bearish bias on the Nasdaq 100 for today, using the pivotal resistance zone of 20,250, 20,390. First support level to watch will be the minor swing low area of this Thursday, 8th of May, during the this Wednesday, and as well as Tuesday, 19,600. So only a breakdown below 19,600 may expose the next support zone at 19,020/18,790, which correspond to the 20-day moving average, and as well as, yeah, close to the 20-day moving average. All right, so however, if price action starts to see a squeeze up and an hourly bullish breakout with hourly close above 20,390, that would invalidate today's intraday trend bearish bias to see a further squeeze up and a much more pronounced recovery to expose the next near-term resistance level at 20,630 and even 21,055 next, which is the one-time Fibo extension from the low of 22nd of April. And also, if you go back to in time, the graphical resistance over here, which is the congestion area of 25th of February and 3rd of March this year. All right, in the first step. So watching 20,250/20,390 pivotal resistance zone on the Nasdaq 100, and we'll flip to an intraday trend bearish bias for today. First support level to watch, 19,600. Okay, so that sum up the intraday technical outlook on the major stock indices. Next up will be the commodities market, starting with gold XAU/USD. So for gold XAU/USD, right now we start to see kind of a recovery right at the 32.65 support level, which is this congestion area here from 24th of April to 2nd of May, that has a bullish breakout, now turns into a pullback support level. Hourly RSI has also started to shape a bullish divergence over here, but not at the desired oversold level yet. Right, there's a bullish divergence of a higher low. Okay, over here, but not at the desired oversold level. So previously we have a more significant recovery once the bullish divergence is being sold at the oversold region. That was taken shape on the 1st of May, where the previous recovery takes shape over here. So right now there's another bullish divergence, but this bullish divergence is not as desired because we want it to be the oversold region, but nevertheless we still got to respect there's some form of support that's being seen at the 32.65 level as price action try to reintegrate back above the 20-day moving average. So with this mixed element that's seen right now in gold XAU/USD, so on an intraday basis we will flip to a neutrality stance, so neutral between 3,360 and 3,265. So only a push up and a bullish breakout with an hourly close above 33.60, then that would reinstate back the bullish view intraday for gold to revisit 34.20/34.35, and above 34.35 may see a retest on the current all-time high at 3,500 next. Okay, so flipping to a neutrality stance for gold for today due to mixed element, watching these two levels, 32.65 and 33.60 for now. Next up will be the West Texas oil over here. So West Texas oil yesterday attempted to came down and stage a push up again, and now testing the 60.35 short-term pivotal resistance level. So if we look at the price action on the daily time frame chart over here, right? So if you look at the daily chart over here, it seems to be that there could be some form of this what I call bottoming formation, at least on the medium term time frame scale, for a potential another round of mean reversion rebound to take shape back again. Why? Because if you look at the hourly, this is same low, okay, same low over here, but the RSI shape a higher low, right? So there's a form of a bullish divergence that's been seen on the daily time frame chart. So what it means that there could be another round of mean reversion rebound taking shape after that sell-off that has taken shape from 23rd of April all the way down to this Monday morning, this week Monday low. All right, over here. So with that positive element that's being seen on the daily time frame chart for the West Texas oil, for today we will flip to a intraday trend bullish bias, right, for West Texas oil. Okay, let me change this. Let me do a tidy up over here. Okay, give me a couple of seconds. Hopefully, yeah, it's up again. Okay, good. Okay, let me change this. So my pivotal support for sure will be at 58 figure, where it shaped that V-shaped recovery. Okay. All right, so above 60.35 may expose the next intermediate resistance level at 62.39, followed by 63.88. We also correspond to the downward sloping 50-day moving average. All right, so over here, so a potential for a extension of this mean reversion rebound sequence towards 62.39, and above it sees 63.88 next. So after hitting this level again, we got to be mindful as that medium-term downtrend still remains intact. Price action still trading below the 50-day moving average. So whatever bounces that we see is only very short-term dead cat corrective rebound sequence over here. So given that 58 short-term pivotal support on the West Texas crude oil, we will flip to a intraday trend bullish bias for today to see a extension of a potential minor mean reversion rebound sequence within its medium-term downtrend phase that is still intact. However, if price action is unable to clear above 60.35 for today and it came all the way down and break below 58 figure level, then today's trend bullish bias will be invalidated to see the continuation of the impulsive down move in first step retesting 55.50, which is the minor swing low area of 9th of April. All right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? All right, so for today over here during the European session will be rather quiet, except that we have the Bank of England governor speaking at 4:40 p.m. Singapore time, where it may impact the sterling dollar and the sterling crosses. 6:15 p.m. we have two Federal Reserve officials speaking. 6:15 p.m. Fed Williams and 6:45 p.m. Fed Bar. So market participant will be very interesting because this is the first set of Federal Reserve officials speaking right after this week FOMC meeting. Okay, then thereafter during the US session before the start of it, 8:30 p.m. for those who have interest in the dollar Canada. You have Canada Tier 1 labor market data, which is the unemployment rate and the unemployment rate and employment change that will be out at 8:30 p.m. Singapore time. And thereafter, no Tier 1 US economic data, but we have a slew of Federal Reserve officials speaking, 8:30 p.m. all the way up to 11:30 p.m. Okay, Fed Kugler at 8:30 p.m., 10 p.m. Fed Kusby, 11:30 p.m. Fed Wheeler and Fed Williams. And over the weekend at 9:30 a.m. Singapore time, we have Tier 1 economic data from China, which is a Saturday, 9:30 a.m. Singapore time. We have the inflation rate and the PPI rate. All right, and also do not forget this weekend we also see the first official meeting between key US official and China official to kickstart their trade talk discussion in Switzerland. So things may get volatile, especially if there's any outcome, either positive or negative, that have a spillover impact on early Monday Asia session, which is next Monday on the 12th of May. All right, so with that, that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a restful weekend, even though this weekend will be very, very important because of that trade talks between US official and Chinese official that go to kickstart over these 2 weekends, Saturday and Sunday, and it may have a two-way volatility spillover impact when the market reopen on next Monday on 12th of May. So with that, have a great weekend, and we shall speak again on 12th of May to decipher the next major movement on the global markets. This is Kelvin here, signing off. Thank you.